Welcome to Save U.S. Taxes Legally. I'm going to start off with three simple questions. Number one, do you want to leave a legacy for future generations? Yes or no? Number two, do you want to save taxes year after year, generations after generations? Number three, do you want to learn the secret of the rich? If you answered yes to all three questions, stay with me for the next half hour. Imagine saving four, five, six figures in taxes every single year. You can use this money to put back into your business, to pay off your mortgage, buy a new vehicle, take your family on a well-deserved vacation, give to your favorite charity, or to save for retirement. Imagine all lawsuits become frivolous and go away. Think of how much time, anxiety, worry, uh, court fees, attorney fees just disappear. Imagine nobody knows what you own, where you own it, how much you own it, what you do with it, and how much you sell it for. Welcome to Save U.S. Taxes Legally. My name is Sally Gimmon, and I'm the owner of thetrustisyou.com and a free class on the Great Discovery. If you go out to www.sallygimmonSquishedTogether.com, you're going to get a presentation similar to this, 3 articles from Forbes magazine I did not write, 2 pages of case law that you can research to your heart's content. Now, I believe every U.S. investor, U.S. business owner, U.S. franchisee owner, U.S. entrepreneur, and U.S. 1099 income earner needs to learn this information. It's not taught in schools. I believe since I learned the secret of the rich, it's my duty and my honor to teach it to others so they too can save taxes. And I believe that the playing field must be leveled for all businesses. The Amazons of the world get free land. My brother lost his brewery because the rents went too high. That's not fair. So let me start sharing my screen and go over this. I know what you're thinking, the elephant in the room. How come my CPA hasn't told me about this? How come my financial planner has not told me about this? Why haven't I learned about this in school? Great questions. There are over 1 million active attorneys in the United States, and only 4% are trust attorneys. A textbook they study in law school is called Scott and Asher on Trusts, 5th edition. The law firm I work on behalf of was started by a Harvard law professor, Paul Benson, who helped Scott and Asher write that book. And he wrote 5 separate trusts to save very specific taxes. You're not tax-free, you're saving specific taxes. Unfortunately, he's passed away. Now his grandson and great-grandson run the law firm. And in 77 years, not a single trust has ever been audited. They're so confident in what they do that they will give you a certification saying that if you get questioned by the IRS, they will defend you free of charge. In 77 years, it's happened once, only once. A senior IRS agent flew down to the law offices just outside Houston, sat down, spent 5 hours in the boardroom going over a business trust. Then he signed off on it, and 2 weeks later, he sent an unsolicited letter back to Benson Financial Trust. Again, this is legal. It's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions, and it's won both times. You can't get more legal than this. So, my website, www.thetrustisyou.com. The 3 ways you're going to save: you're going to leave a legacy. I can't stop you from being sued, but all lawsuits become frivolous and go away, and your information is completely private. Now, my personal story, so you have it. I became a real estate investor in late 2018 when my mom got sick. Unfortunately, she got septic of the blood or blood poisoning, got into her pacemaker. She was on a ventilator for 13 months, in a hospital for 15 months, but she got better. I started real estate investing in 2019 with my mentor, Jay Tannenbaum. I wholesaled 7 properties nationwide and paid off $184,000 in debt. Woo-hoo! Sally was a rock star. I even had $50,000 sitting in my bank account to pay for my short-term capital gains. Well, COVID happened in 2020. I don't know about y'all, but 3 of my properties didn't pay me April 1st. And then on April 4th, my CPA called me to tell me my tax bracket went from 22% to 24%, and I owed the federal government $94,000. Remember, I only had $50,000 saved. Well, I took a HELOC off of my paid off house completely defeats the purpose of being a paid off house, but I paid off my bill. It's COVID. I had an extra time on my hands. I spent 5 months researching the Rockefeller Spendthrift Trust. It's called The Office, and I wanted to know how the Rockefellers could save taxes. Well, with my $94,000 tax bill and my 5 months of researching, you're now going to learn this in less than a half an hour. Congratulations, you're doing the right thing. So let's go down to the next page. Maybe. Okay, computer, go to the next page. Now, most people don't know anything about tax brackets. Death and taxes, taboo subject. There are 4 ways to file your taxes. Single, the most expensive way. Head of household if you have children under the age of 18. Married, filing separately. And then married, filing jointly. Cheapest way. Now, they keep talking about President Trump's tax brackets. I'm not sure where they come from. This is 2025 taxes, and they have just changed this. Check this out. Single and married separately are the exact same taxes all the way up to 37%. There's 7 different tax brackets. More money you make, the more money you pay. So if you get nothing out of this meeting besides that you can save taxes, if you are married, please file married filing jointly. You'll save so much in taxes. It's just a no-brainer on that. So my tax bracket, I was single, went from 22% to 24%, and I owed the federal government $94,000. Let's go to the next page. Now, I want you to research this as much as you can. If you research tax code 643B, please do, you'll find an IRS letter dated September 11th, 2018. In this letter, they specifically say they do not like IRS tax code 643B, and they do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. Well, guess what? I do not like lima beans. That's my opinion. Maybe you love lima beans. The IRS can say whatever they want. They can't change the tax code. Only Congress can. Our current president and too many other presidents, too many senators, too many congresspeople know the secret of the rich and have the trust. The only thing they're doing is raising taxes for middle class, and my goal is to teach this to as many people as possible. Now let's go over these 5 elements. They're very important. Irrevocable. This means it goes from generation to generation. The Rockefeller Spendthrift Trust, like I said, is called The Office. It's 7 generations old and has 400 people under the same EIN or employee identification number. They each file a different 1041 tax return, but they all get to save taxes. One of the questions I get is it difficult to get things into the trust and out of the trust? Absolutely not. I've wholesaled 28 properties since having my trust, and it's easy, very easy to do. Next one, complex. This trust can hold money day to day, week to week, month to month, year to year, decade to decade, century to century. The law firm that I work for inherited a trust that turned 350 years old in 2023, before we were a country. This is how old it can be. Now, 97% of the trusts sold every year are exactly what my mom and dad had and what Susie Orman talks about on PBS television. The family trust or the living trust. There's nothing wrong with the family trust. It is designed to avoid probate and then dissolve, and all assets are split up between all the heirs. This is not your mom and dad's trust. This is what the Rockefellers, the DuPonts, the Carnegies, the Kennedys, the Trumps, and Robin Williams have. They know how to save taxes, keep their information completely private, and all lawsuits become frivolous. Discretionary, third topic. This means whoever's a trustee or trustees can make the rules for all the beneficiaries while they're alive and then also from the grave. There's no contesting the will, there's no fighting in court. Whatever you say is law. I have a client, husband and wife, who have 4 apartment buildings in Los Angeles area. Thank God the fires did not affect them. Their adult daughter lives in one of the apartments and has a problem. They're requiring her to do 4 random drug tests per month to continue living there rent-free. She actually took her mom and dad to federal court and sued them. The judge read over the trust, and he told her she had 2 options. Option A, pass the drug test and stay living rent-free. Option B, move out and start paying rent and not worry about drug tests. I do not want to be invited to their Thanksgiving dinner. Non-Grantor. This makes the trust 100% private. It's a major difference between the family trusts. When my mom and dad started their family trust, it was the Gibbon Family Trust. Both my mom and my dad were the grantors or the settlers, and when they both pass away, that's when all their assets were divided up. When you start this trust, you're going to have someone who will never be a beneficiary, never be a trustee, who will sign up to be the grantor or the settler. It's not a speed bump, but you need their social security number. If you cannot find somebody to do this, I have done this for several of my clients. It's very easy to do. I sign up to be the settler, and then I sign myself away. It makes the trust completely private. If anybody researches the trust, they'll find out it's out of Texas because that's where the law firm is. And then they'll find out that I was a settler. And they have to find me. I don't know what you're doing with your trust by that time. It's completely private. Then the fifth element, spendthrift. Like I said, this has been in front of the United States Supreme Court on 2 separate occasions. Both times it has won. You can't get more legal than this. Now, we're only going to talk about 2 of the major trusts here, the business trust and the beneficial trust. The other 3 trusts, if you have mineral rights, if you're over 65 and worried about Part B of your Medicare, or if you have a charitable trust, you need to start a charity, I can talk to you out of this. So the first one, we're going to talk about the business trust. This is for all U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and 1099 income earners. If you're making at least $100,000 gross a year, you should be looking at this trust. This is a true story. He was, at the time, he was 26 when he contacted me. He was working for a defense contractor in Virginia. And in 2024, he made $150,000 in 1099 income. When he contacted me, if he makes the same $150,000 in 2025, he would save at 90%, $25,962 in federal income taxes. Add in this 5.75% on Virginia state income taxes of $8,625, or for the full year, save $34,587 in 2025, 2026, 2027. If he sells more than $150,000 or gets paid more than $150,000 in 1099 income, he'll save even more taxes. This is just one example of clients that are saving thousands and thousands of dollars. To give you an idea, I work with dentists, I work with doctors, I work with independent truck drivers, I work with Amazon store owners, I have franchisee owners, I have a mom and pop pizzeria. Who else? All kinds of people. Today I actually talked to a gentleman who does robotics, and we're going to save him almost $24,000 per month. It's an amazing thing. That's the business trust. It is designed to save federal and state income taxes. The gentleman I spoke to today, who was in Texas, does not have state income taxes, so he would only save federal taxes. Now, like I said, I'm a real estate investor. My mom was sick in the hospital in Charlotte, North Carolina. They were from, I was living in Phoenix, and they were from Goodyear, Arizona. We went to Charlotte for a wedding. My dad stayed with my mom for 9 months until she got strong enough to come back to the Phoenix area. I purposely bought this bank-owned mortgage, reverse mortgage, for $20,000 in July of 2020 because I didn't know how long COVID would go long. She was still in the hospital in Charlotte. When it finally went to auction on August 28th of 2021, before that, the $20,000 I paid for it, and then going for $50,000, that $30,000 spread that I would make on that house at 24% a tax bracket, I would save $7,110 with the trust. When it did finally go to auction, the final bid was $64,326. Sally, woohoo, made $44,326 without lifting a hammer, the way I like to invest. But more importantly, at 24%, I got to save $10,368.24. That's my first property in this trust. Since having this trust, I've wholesaled 28 properties. I have 12 notes from the paper on the house to pay me mortgage. I have a crypto bot. I have 3 rentals, and I have 3 seller financing houses. Now, with the beneficial trust, the 5 taxes you will save are short-term capital gains and long-term capital gains. So if you sell a crypto, You are a Forex investor, you wholesale, you fix and flip, have auction houses or tax liens, that's short-term capital gains. Long-term capital gains are a year or more, or if you have an investment property, you're selling your business, or you sell a baseball card. Interest income taxes are when you're a passive investor, you're in mutual funds, you're in doing the BRRRR strategy, you're doing subject to real estate, my notes, creative financing, seller financing, and Forex investors. Yes, Forex investors, you get taxed twice, capital gains and interest income taxes. You'll save dividend income taxes if you're in the stock market, you're a day trader, you're an options trader, futures trader, commodities, or living off of dividends. Again, all these taxes, except for long-term capital gains, are taxed between 10% to 37%, depending on your tax bracket. Rental income taxes, if you have short-term rentals like Airbnb, vacation rentals, 3 doors, 10 doors, 20 doors, maybe you have commercial property, maybe you have apartment buildings or multifamily property, or you're doing arbitrage. Yes, you can move a property that's on a depreciation schedule into the trust, because remember, all lawsuits become frivolous. So if the renter's dog gets out, bites the mailman cannot sue you. He can only go after the renter. And after that, you no longer have to pay for depreciation or schedule, or you don't have to do cost averaging schedule. And then one that's not on here, royalties are taxed a little bit less. They're taxed between 10% to 35%, 7 different layers. So if you're in the NFT world, you're an actor, an actress, you're an author, an artist, you have copyrights, patents, or intellectual property. You can save taxes on everything. Personally, not trying to crow, but in 2024, I wholesale 3 properties. I have 12 notes that are interest income taxes. My friend does my options tradings, and I get paid by the law firm as a royalty because they have the copyright on the trust. I didn't pay taxes on any of that. Now, long-term capital gains are when you sell your business. This is a true story. Son saw my TikTok around Christmas time of 2022, sorry. He knew his mom and dad were selling the family restaurant in Kentucky as is for $3 million. His father, Jim, and his 2 uncles built the restaurant. They're selling it, the cutlery, the food, everything in it as is. They were working with a business broker, Sam. So Jim gave me Sam's phone number. I called Sam, told him we had changed the trust name. Sam's like, what are you talking about? I'm going to make $30,000 off of this one deal. I need the business trust. I told him about my affiliate program. Sam tells the gentleman, Michael, who's buying this restaurant, it's going to be his 7th restaurant in 3 different states. And Michael buys a business trust, and Sam made $1,000 off of that. Again, I don't know if they're going to pay 15% or 20%, but if it was at 15% on the $3 million, on April 15th, 2024, they got to save $450,000. And if it was 20% on April 15th, 2024, they got to save $600,000. Now, if you want to find out more information or have a free tax breakthrough, did the wrong thing, tax breakthrough session with me, you're going to schedule at www.trustisyou.com/scheduling. My free class is on the Great Discovery. My first name and last name squished together. There you're going to get a presentation very similar to this. 3 articles from Forbes magazine I did not write. 2 pages of case law so you can research this to your heart's content, and examples of clients saving thousands of dollars. My goal is to help as many people as possible save as much money as they can. It's legal. It's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions and won both times. Thank you for watching this presentation. If I can help you, set up a 30-minute tax breakthrough session with me. Have a beautiful week. Take care.